So welcome to our webinar for the do's and don'ts of angel investing. I'm Eller Mallchok. I'm the managing director of Jumpstart Foundry.
Yeah.
And this is
Vic Gatto, CEO of Jumpstart Health Investors.
So really over the last couple of months, Vic and I have gotten a lot of questions from existing investors, from potential investors, people that are just interested in it around angel investing. Can they do it? How best do you do it? What do you need to think about when you are contemplating making an angel investment? And so we thought it would be a good idea to get on here and tell you a little bit about angel investing and the best practices that you and others can take when they approach this exciting area of the market.
Yeah, I mean, I think as you see, the stock market is going up, it's going down, it's all over the place. People are looking for other solutions, other ideas of places to put at least a piece of their money.
Cool. Yeah, and so it's, it can be confusing, it can be a lot to think about, but we want to make sure that if you are thinking about it, that it's not scary and it's very, it just takes a little bit of research and some coaching and diving in. So before we dive in further to this webinar, I want to take a minute just to quickly introduce ourselves. So again, I'm Eller Mallchok. I'm the managing director of Jumpstart Foundry. I've been working with Vic for the last 5 years. Jumpstart Foundry is our seed stage fund where we raise and deploy, an annual fund of around $3 million, all into healthcare investments. I've been, again, doing this with Vic for the past 5 years, really got my start in venture, though, with another women's angel network down in Chattanooga. They really taught me the best practices around due diligence and sourcing deals and how can you identify whether or not a single founder or a single opportunity is going to make a strategic and good angel investment. And so I'm still relatively early in my career, but lucky enough to be investing alongside Vic and have been doing so again for a little while.
Yeah, you're early in your career, but you have invested in more deals than probably almost any other VC in the country because you've done 70-something deals.
Yeah.
And so my name is Vic Gatto. I'm the founder of Jumpstart. I founded it 5.5 years ago. Eller was one of the really early hires. But with a guy named Marcus Whitney, we left our jobs and started Jumpstart with the idea of really taking a new approach to early stage investing, focusing only on health and trying to make an impact and make a huge return both simultaneously. And we've been lucky to sort of time it well. 5 years ago was a great time to start doing health investing, and the market's sort of come to us, and it's been a lot of fun.
Yeah. And so again, I was just saying, we've had a lot of questions come in, so we just want to give a brief overview kind of around, the benefits of angel investing and then basic strategies that any angel investor should think about as they are contemplating allocating funds towards either individual angel deals or fund models as well. So
yeah, it's probably a 101 version. Like you won't be an expert at the end, but a basic overview.
Right. And so, Vic, I'm just going to ask you some questions and it can turn into kind of a discussion, but something that has been discussed a lot and asked, a lot of questions asked about it are kind of what are the benefits and risks with angel investing as compared to other platforms or other methods of investing?
Well, so I think the main difference is that it's not a standardized security, or it's not a standard deal that you're buying into. So if you go to a publicly traded stock, the SEC regulates it and you buy one share and it is pretty tightly regulated. The financial statements are all the same. There are rules and they have issuance of information every quarter, every year. And you can be confident that you're getting the same information as other buyers.
Right.
And that is comforting. In the private markets, there's not standardization. So there's an opportunity to get more information and have an advantage. There's also an opportunity to not know what you're getting into or not understand. They don't have to have standard financial records. And so you have to really look out for yourself and have a strategy of how you're going to be fully informed for your own benefit.
Mm-hmm.
There's no kind of third party that's standardizing it for you.
Yeah. And so when we talk about angel investing, it's always put into this high risk asset class. Talk about like the risk that's associated with it, plus the benefits or the great things that come along with greater risk.
Yeah, I think all in life is sort of trade-offs, right? So you have an opportunity to do much better financially,
Mm-hmm.
but there's also an opportunity to do much worse. The spread between really good outcome and really bad outcome is much larger in private markets.
Yep.
I see that as a positive because we spend a lot of time managing the risk side and then we get the benefit of the upside. But you have to take it seriously and you have to really understand what you're getting into. You certainly can have losses as well.
So what are one of the things that we always talk about of kind of what are the really positive good things about angel investing? And one is, your ability to impact or influence, per se, the outcome or, help these companies along more so than you can directly influence, public markets. So talk a little bit about that and how you've seen some investors, angel investors, do that and kind of what their drive is in doing so.
Yeah, a lot of angels get involved after they've had a career, mm-hmm. and they want to certainly generate income and improve their financial situation, but they also want to help other teams, other management teams, other entrepreneurs. Maybe they have some experience set in their career, whether it is in healthcare or they're a doctor or they were in finance or logistics, and they can really be beneficial in helping the small kind of startup team kind of navigate those waters and bring lessons to bear, give them assistance. And it's pretty fun because they invest money and then they also sort of affect their own outcome in a positive way.
And so that's, I think, a big question that I get a lot from people is, I've never done it before. I don't have a background in finance. I'm scared. I don't know how to do it. But I think that's kind of the important thing is that, as long as you're accredited, and we're going to go into that briefly just to make sure that we tell everyone listening into the webinar, here's what it takes to actually, participate as an angel investor. But the background, you don't have to have a traditional finance or economics or you don't have to be a CFO to be an angel investor. I think it's actually really helpful when you have a skill set or knowledge base that can be applied to a specific industry, and that can be really valuable for some of the portfolio companies that you work with, not just a really solid understanding of finances and investing per se.
Yeah, I mean, I think anything that is new mm-hmm. can be scary when you first approach it.
Yeah.
Right. So anything that you don't have a lot of experience with or you haven't done many times can be scary and exciting and everything all at once. And the fun thing about angel investing is you get to learn a lot of new approaches. Even if you know the space very well, it might be a new business model or a new product.
Yeah.
And that's intellectually interesting and you sort of benefit financially, but you also bring back learnings to the rest of your life and your portfolio. And it's just like anything, you should do research and learn about it and listen to this webinar and then ask questions and get an attorney to help you and think about what amount of money would be an appropriate amount of money to sort of test drive with. Mm-hmm. And then it becomes less scary and more fun. Just if it's sized right, I think that's the most important thing.
So now I really want to just dive into kind of the tools and some of the do's and don'ts around how you should think about approaching angel investing. The first is, of the do's or just kind of the facts of the matter. What does it take to be an angel investor?
Well, so you have to be accredited, and that is a definition created by the SEC. It's $1 million net worth or $300K family income. Is that right?
Yep.
I think that's right.
Yep.
So that's a very technical definition. You either are that or you're not.
Right.
If you're not that, you cannot you're not an accredited investor.
Yep.
And if you are, then you sort of check that box, and then you move into what should I do next?
Right. And so I think that what you do next is portfolio strategy. How can you build a portfolio strategy that is meaningful and right for you? And so what are the things that you should be thinking about as an angel investor when you first start building your own portfolio strategy? One, for me, that I talk to a lot of our investors about is, what are you personally passionate about? What do you have an interest in? And I think that's true with a lot of angel investors.
Yeah, I mean, I think it's that would be what industry or what type of deal do you want to do.
Right.
I think there's also an amount of money.
Right.
So I would say you should do some percentage of your net worth. So just to make the math easy, say you are worth $5 million. Mm-hmm. You might say, I want to do 3%.
Yep.
And so then you have that amount of money that you can invest, and you ought to think about your portfolio strategy. So how many investments should be in that portfolio? Mm-hmm. And then it needs to add up to the percentages. Right.
And so that's kind of the first step to do, is create a strategy that makes sense for you. You know, what are you interested in? What can you realistically what types of deals can you realistically invest in and engage with? And then the last is, I always say, kind of, if you are getting in at this early stage as an angel investor, you do want to have some impact or influence on what you're investing in. And so I think making sure that you have either an expertise or a network that can actually help those companies that you invest in.
Yeah, I think that helps you get access to better opportunities, because money is important, but there's a lot of money out there, mm-hmm. and so you will get access to more attractive entrepreneurs that have lots of choice if you're also bringing advice around sales or marketing or finance or maybe manufacturing.
Yeah,
it could be a lot of different parts that whatever you have that you feel like you know a lot about, you can then position it as you're the expert at that, and you bring money and this expertise.
Yeah, and so the next step is, so you're accredited, you have a portfolio strategy. The next step is, how do you diversify your portfolio?
Yeah, and that quickly gets to, do you want to join an angel group or be in some kind of fund, mm-hmm. Or do you want to try to do it all on your own?
Right.
And of course, all on your own gives you more control, mm-hmm. but then you have a lot more work to do.
Yeah.
And it also...
And that work includes finding the deals,
trying to find the deals,
doing the due diligence, right. Keeping track of those deals if you've invested, making sure you're getting consistent updates, working with the entrepreneur, all of that, right?
Yeah, and fighting with them to get your tax forms. And there's a lot of aspects to it that are can be fun if you have a lot of time and you like the control of building your own portfolio. But sometimes when you're first starting off, it's useful to join in with other folks that have done this before that can sort of help you along.
Gotcha. So the difference between, a fund like Jumpstart versus direct investments, kind of what are the benefits and downfalls of each?
Well, so a fund would would group you together with several other investors, mm-hmm. and there'd be a manager. You're managing Jumpstart, right? And then a thesis, so Jumpstart, Foundry is investing in seed health deals.
Yep.
And if that fits with what you want to invest in, that can be well aligned. Mm-hmm. If it's not what you want to do, or it's maybe there's a lot that are geographically based, so it's a fund that's only investing in this city.
Yep.
That may or may not be what you want to do.
Right, and so
we obviously love healthcare, but not everyone loves healthcare. So if you don't want to invest in healthcare, they should not invest in your fund.
Right, and so I would say, for the fund strategy, some of the burden of deal sourcing, due diligence, kind of the keeping watch over the flock piece is, transferred to the fund manager. Like myself, that's what I do. It's what I get paid to do. It's my day in, day out. The exciting thing, though, that, I've worked with a lot of our investors, our limited partners around is, they actually do want to do some direct investing, and they want to be calling on that entrepreneur and be a one-on-one mentor to that early stage company. But again, that first step of finding those deals, finding those companies, vetting them can be pretty rigorous and time intensive. And again, you only have, as an individual, you only have the ability to look at so many.
Yeah, it's a lot of work. And the other thing that a fund would give you is diversification very quickly. Right. So just for myself, I like to play around in public markets, but I don't have a lot of time. So I would buy an index fund as like my core position. And then I may see, this product is going to be really good, and I might buy that stock in a small position as well.
Yeah.
I think sometimes in angel investing, it makes sense to get a core position of a fund, whether it's your fund or another angel fund or some fund, and then you can use that as a way to learn and then invest in direct deals or one-off deals around that, whether it's more in the fund or outside the fund.
And so just to kind of cap this off, what should we be telling people? Like, think about this if you are considering making a direct and angel investment or into a fund. I think, something that we were talking about is, how are fund managers incented? That's important. If you're considering investing in a fund, you should know exactly how those fund managers are incented so that they're completely aligned with you as the LP.
Yeah, or at least you understand how they're paid.
Right.
And so it's really important to know if you're going to hire anyone, whether it's someone to, cut your lawn or manage your portfolio of angel investments or anything, you need to understand how are they paid and what is their incentive.
Right.
So my lawn guy, hopefully he's not watching right now, when he says you really need to add this fertilizer, and by the way, I can do that, and I'll charge you another $1,000. Maybe I need the fertilizer. Maybe he just needs another job.
Yeah.
And so really understanding how the comp works. At Jumpstart, we tried to align them. A lot of places do a good job of aligning interests. Some places don't do as good job of aligning interests.
Right. And so it's just something to be thoughtful about as an angel investor. And so that's, kind of capping off the do's and don'ts is do your research on a fund. If you're considering a fund model, do your research on that fund. How are they incented? What are they focused on? Vic, you mentioned kind of geographic focus or industry focus like Jumpstart. Yeah. And knowing as much about that fund as possible so that it aligns with, again, your personal interests and your overall portfolio strategy.
Yeah. Now, if you decide to invest on your own without a fund, I think it's important to make sure you have a plan to get to 8, 10, 12 assets in the portfolio.
Yep.
Because these are high-risk assets. Some of them do very well, some don't do very well. And the way to diversify that risk is to create a portfolio, group of them. And so if you're going to do it by yourself, you really have to create a strategy to do maybe 4 investments a year or 8 investments a year.
And 4 individual
ones.
Yeah.
So that you end up building your own portfolio. So you either can access a fund or an angel group or some pooled entity, or if you're going to do it alone, that is great, but you have to make sure you get enough portfolio companies that you can diversify the risk.
Yeah, awesome. So we are right at about 20 minutes, so I'd like to leave at least 10 minutes for questions. So everyone, you can submit questions to the Q&A function here. So I'll turn quickly our video off. What are the levels of capital and time commitments required for angel investing?
I think there's a spectrum of that. So I guess on the easiest to access spectrum, you could invest $100,000 or more, 100 to 300 in a fund, and then not work anymore or really spend much more time on it. So there'd be due diligence and work around, do I like this fund? Do I want to invest money with them? And then sort of the fund manager takes over after that. That's probably the easiest to do. The other side is to do it all yourself, and maybe you have 8 investments of $50K each.
Yep.
That would be the minimum you would want to do over a 2 or 3 year period. That's going to be much more time intensive.
Right.
And you have to deploy a little bit more money. The benefit is you have full control over it. So you get to decide what you want to do. But I think the downside is you may not get access to as many opportunities or as many really exciting opportunities, because it's hard to spend as much time on it as people that it's their full-time job would do.
Gotcha. And then I just have a question queued up.
Okay.
So that I'll ask. What are the top 3 things an individual should think about when they're considering an investment in an individual company?
Well, I mean, I think the 3 things probably are the team and what they're trying to build. So like if you are getting involved in a restaurant or a health startup or a real estate deal, what are you trying to achieve? What is the team trying to do? Mm-hmm. And is it something that you believe in? And so to me,
do you believe in it?
Do you believe in it? And is this group of people, are they ethical? Are they hardworking? Do you share values? Are you aligned with them? Mm-hmm. It takes a long time. I mean, it's going to be a 3 to 8 year process. Mm-hmm. And so you have to get along with the people at a certain level because you're going to spend a decent amount of time with them.
Yeah.
So that's the first thing. The second thing is, how are you going to get out of this investment? And so
it's always like a fun thing to be thinking about right at the beginning of a relationship.
If you don't think about it at the beginning, you are not going to get a chance to impact it.
Yeah.
So how are you going to exit? If it goes really well, how are we going to exit? If it goes really badly, how are we going to exit? If it goes sort of medium. Mm-hmm. And that's how we think about it is a, upside, downside, mediocre. How do we get out of this thing?
Yeah.
Because there can be opportunities where it is super exciting and the company vision goes really well, but the team is kind of happy with their salary and just going along, and they don't necessarily want to set it up so you get your investment back.
Yeah.
And that's something to talk through before you invest so that there's shared alignment on how we're going to do this.
Right.
And then the third thing is to really think through the governance or the decision-making structure. So is there a board of directors? Are there shareholder agreements? Are there rules about how things are going to be decided? Mm-hmm. And what is your role in that? And do you have particular rights? Are you in the mix with all of the shareholders? How is governance is just a fancy word for how things are decided in the company?
Yeah.
And how do you play into that?
Cool. Well, I appreciate everyone joining in on just the do's and don'ts, some highlights around individual angel investing versus investing as an angel into a fund. Some good strategy discussion on how you should think about what you're going to invest in, the teams you're investing in, how do you engage and impact and influence those teams. And
yeah, it was fun. And our emails are on the screen, I think.
Yep.
I think everyone should email us if they're interested. Of course, we manage funds, but we also have lots of companies that are looking for investors. We only really focus on health because we like health. But reach out to us if you have any questions about it.
Yeah. So anyone reach out. We're happy to discuss angel investing with anyone. Thanks, everyone.